All right, guys. I think I am live. And today we're going to be talking about the mathematics of real estate subject to investing. Again, the mathematics, the numbers of real estate subject to investing, because that is so important, in my opinion. Now, I'm going to be talking about the things that I look at when I find a deal and how I run through the numbers to make sure it's a deal for me and I want to buy this property. Now, I'm a buy and hold guy, so I looked at things through that window. If someone is a fix and flipper, they're going to be looking into a different window. If they are a wholesaler, they're going to be looking to a different window. So keep in mind that I'm coming through it as a buy and hold guy. All right. And I'll try to touch some points about the other windows as well of wholesaling it or if you're fixing flipping it. Now, before I go into it, I want to define what is subject to investing because everyone asks me that. Simply put, is seller financing when the homeowner is highly motivated and they're willing to become my personal bank so I don't have to use my credit or a pile of cash to buy the property. The seller's going to become my bank. And then the seller has a mortgage on their property because they don't own it clear and clear. Okay. Now, that said, we know what it is. If you want to know more about it, go to mrnofluff.com. I have tons of training videos on my blog, what is subject to and a definition and how to structure the deals and so on. But today I'm going to be talking about the mathematics of subject to investing. The very first thing that I look at when I buy a subject to, sometimes I call it a free house because it really is a free house. Someone's just going to allow me to step into their shoes and make their monthly payments. So I call it free homes. One of the very first things that I look at when I buy a free home or a subject to deal is cash flow. To me, that is very important. Um, and I want to know that, simply put, can I get more money, a positive cash flow, than my expenses? And my expenses are PITI, right? And at the same time, management, and at the same time, repair costs, because holding any kind of property is going to cost money. The AC may have problems, or vandalism may happen, or there's vacancies, or I have to pay a realtor to list the property, to give me a renter, and so all that stuff has to be included in there. And after ended all that, am I going to get a positive cash flow from it? So the very first thing that I look at when I get a free home, when I get a subject to home, is, what do you think? Leave it below. Okay, cash flow. If the property has no cash flow, I'm having a little bit of internet troubles. 1 second, guys. Let me do this. Okay. If the property has no cash flow, then I'm not going to be doing the deal. It's just very simple. I'm not going to do a deal that doesn't have cash flow. Sorry, we're having trouble playing this video. Okay, that's cool. All right. So, number one. Now, the other thing, the second thing that I look at in the mathematics is that how much is the seller behind? Because I don't want to say all the time, but there's like a 50% chance that the sellers are financially motivated and the house is behind. What does that mean? They're behind in their taxes, or they're behind in their HOA, or they're behind in their mortgage payments. Okay, 50%. The other 50% are what's called emotionally motivated sellers, and they're not behind at all. Okay, they're just have an emotional problem. Maybe there's a death in the family, or they're going to a divorce. Okay, that brings me to a story that one of my students just sent me on Facebook, that he's buying a house with equity, and he bought it subject to like $38,000 of equity, and he created himself with $307 a month positive cash flow. So the house does not have to be behind, but just 50% of these motivated sellers will have financial motivation, and they may be behind. I don't even want to say 50. I would say like 33%, because some of them are going to be behind and they're not behind yet. So I would say there are people that are behind, people that are going to be behind, and then people that have just emotional motivation. So that's very important, how much they're behind, because that's going to tell me how much money do I have to come to the table. Again, I like buying subject to homes because they're almost like a free deal, right? If the house is not behind, then I'm getting a free deal. Now, if the seller's behind 3 months, I'm almost getting a free deal. If the seller's behind 6 months, well, it might be a different story. It all depends on many different factors, like how much equity it is, and I'm going to get into that. So, just because someone's behind 6 months, it doesn't mean it's a bad deal. Just like my students just messaged me, he bought the deal and it was 6 months behind, and they did what's called a loan mod to reduce the monthly payments, to reduce the back payments, etc. So the number two thing I'm looking for is the amount of money the seller is behind. If it's in their taxes, HOA, whatever that is, I need that lump sum of money because without that, I can't do my math. I can't do my numbers, guys. I can't do my numbers. Okay. Thank you, Armando. I'm not sure if said your name right, my man, but thank you so much. Okay. Um, Now, again, if the number is big, then it can still be a deal because I can have other strategies. I can do a short sell, I can do a loan mod, I can do other things to get the numbers working for me. Just like one of my students just did the deal. That he when he talked to the seller, she said that she was 3 months behind, and then once the dust clears, which happens all the time, he realized that she's 6 months behind, right? And so what they did is a loan mod, and now they got the monthly payments a lot lower. That back payment is now added to the back of the loan, so he doesn't have to come up with it. So there's still other options, but I'm still looking. Now, do I favor someone that's not behind versus someone's behind 6 months? Absolutely. I like to buy houses that they're not behind, okay, versus the ones that are behind. But doesn't mean that it's not going to be a gold nugget if they are behind 6 months, because like this deal that my student did, it was a gold nugget. I mean, still got $38,000 in equity, got a loan mod. So, but I prefer not to do all that stuff because the easiest path is find someone that's not behind or is going to be behind or is only 1 month behind versus 6 months behind or 12 months behind, where I have to put more energy and create more tools to be able to hatch this or this pot. Okay. Now, the other things that I look for, the numbers that I look for, are the rental comps because earlier my number one thing was cash flow, and since I'm a buy and hold guy, I want to know that am I going to be able to cash flow this property. So I look at the rental comps in that area that I'm buying, and that's very very crucial. I mean, these are my primary numbers that I look at. I have primary and secondary. So the primary numbers that I look at is the rental comps, and then there's another thing that goes with it. Okay, with the rental comps, and I'll get into that. But the rental comps, for me right now in the market that we're in, we're in a market of uncertainty. I'm not gonna buy a house that's only gonna give me $100 a month positive cash flow, or 200 or 300, right? It got to be like 400 and more, okay? Especially if I'm gonna make promises that I'm gonna make the payments to the seller. If the house is gonna be vacant, and what's going on in the market and the economy. So I got to get at least $600 a month plus positive cash flow. But in the last crash, 2006, I was happy with $150. I was happy with $200. But my situation was a whole lot different too. At that time, I had three businesses. I had massive cash flow. So it all depends on the situation. And for me, the situation now is I got to get at least 400 to 600 minimum to do the deal, and so on. Okay. Now, what the rental comps, the other thing I look for is DOM, days on the market, because that's very, very important. And what that means is when I put it up for sale, on the average in that neighborhood, how long is it going to take for me to rent it out? Okay. Because if I can't rent it out really, really quickly, then I'm going to have to sit on here and I'm going to have to throw money out of my own pocket so it doesn't become a free house anymore, right? If the holding is 6 months, then I'm probably not going to do that deal, right? But if the holding DOM is days on market is only like 15 days, 30 days, 45 days, 60 days, then that might be, you know, I might do that deal. But also there's so many different things that are, you know, associated with it because if the deal has $100,000 of equity, but the days on the market is 60 days, I might still do that deal, right? And so there's so many different things. Okay, it's just not like one level. It's multidimensional. Okay. Now, before I forget, guys, I always forget. If you like to work together directly to find these types of deals, know what to say to these sellers, when to say it, how to negotiate, how to fund the deal, how to structure a deal, you know, and so on, then consider joining my profit sharing. If you have a successful business or you have some money set aside to, get into real estate, I'll work with you directly one on one. I will hold your hand, and on top of that, I will give you all my business systems that's listed in the profit sharing, and I'll split the profits on one deal with you, so I have a vested interest to help you learn how to fish this business, right, and create this actual business that you can constantly do deals. It doesn't matter if you're trying to wholesale, if you're trying to do fix and flip, you're trying to do um, get passive income like me through rental properties, whatever the story is. Profit sharing is for you guys. Now, if you have a business, this is the best thing for you. It's 5K. I work with you directly for 1 year, guys, and I'll give you all my business tools. Now, the other thing before we go further is, if you're looking for a side hustle, right? You may need some side hustle because you want to do fix and flips, and instead of borrowing money from a hard money lender, or instead of getting into debt, paying 18% credit card fees, instead of begging your family, or raising funds or any of that kind of crap, there are side hustles out there like the new flip, which is something that I use every day to generate money. Where I put $100 in, it's a business. I put $100 in, and I'm able to 2x to 8x it recently, and really fast with high velocity. And then I use that capital to, pay for my marketing, to buy my cryptocurrency. So I don't have to use my own money or, any of my savings. But in reality, I'm just invested at $100 in this business, took my $100 out, and I'm not using house money to do my best to fund my business versus, hard money or credit cards. And that's the way I've been rolling since high school, guys. That's why I've never started a business without, with ever borrowing money from a credit card or a bank or any of that stuff. I just use imagination, creativity, and that's what I teach you in my channel. Okay, so if you need a side hustle to, to pay the bills, or if you need a side hustle to fund your business, you need some side hustles to pay for your fix and flips. You need some side hustles to, go on vacation, or buy new cars, whatever the story is, because you don't want to use your own salary or your business income. Then the new flips for you guys. Go ahead and download it. We have a special rate going on for it. It works. Doesn't matter if you're in California, if you're in New York, if you're in Chicago, you're in Great Britain, you're in Canada. What it focuses on and what it teaches you is how to find motivated sellers, how to negotiate with them, how to talk to them, and all it requires $100, which is way better than going to trying to do a wholesale deal if you've never done a deal before. On top of that, it teaches you about the real estate game. All right. So that said, the new flip is at MrNoFlip.com. Let's continue with the mathematics of real estate investing. If you guys have any questions, comment, leave it below. I'd be happy to answer for you. People are asking, what are you drinking, Mike? Chai, dude, chai, and damn, I'm out of it. All right. So we talked about, I looked at the rental comps and the days on the market, because that's so important to me, because I don't want to have a property where I'll have to hold for 6 months unless it has a lot of equity. Okay. Now, the other thing I look for is repair costs, right? And the type of homes that I buy are not in war zones, or I look for appreciating areas. I look for areas that are in high demand, that people want to live. And usually people that want to live, that have college degrees or master's degrees or PhDs, want to live. Okay. So those types of homes, usually there are newer homes, newer build. That's what I focus on. And they don't really have repairs. But I always consider that, because again, my numbers, my cash flow, everything's going to be contingent on how much money I have to come out of pocket. And I like to buy free homes. I don't like to buy a home that has $50,000 in repairs or $20,000 in repairs and it's behind this. Those are headaches. I like to find beautiful homes that I can move into, that I feel safe to move into, that I can feel safe to let my friends live in there, and I'll be proud of it. But they're also a great deal. They create massive cash cow. And I'll continue going on some of the other points. We'll get into that. Okay. All right. So now, last but not least, when I get a subject to deal, when I get a free house, I also look at see what the equity is. Now, notice that I didn't say the equity at the very top, because in a down economy, for me, when I buy houses, like I only get into the market when the markets are crashing. I don't try to do real estate when it's going up, like 2015, 16. It's just too much competition. The sellers are unrealistic, and I don't like to work that hard. I just want to. I'm patient. I know how to do the swings, and I flow with it. I don't resist it. And so, but when I get into the market, it's when the market is crashing, and usually a lot of people don't have equities. For example, 2006, fourth quarter, 7, 8, 9. A lot of people didn't have equities. Okay, so do I want to buy a house that has equity? Absolutely. I want to buy a house that's worth 200 and I get it for 50. I get it for 100. I get it for 110. I don't want to buy a $200,000 home for 200. I don't want to buy a $2,000 home for 210. But in a down market, I have bought homes that are like that. Again, not financial advice. You should do your own due diligence. But for me, I bought homes that were have marginal equities. I have bought homes that have zero equities. I bought homes that have negative equity because the market was coming down. But the same exact home, when the market went up, they were worth $100,000 more, right? So the thing for me is that equity is important, but if I'm getting a free fucking home, I don't have to go to a bank and please can I get a loan? I don't have to put 20% down. The house doesn't need any repairs. It's splitting off $600 a month positive cash flow. I can rent it out really, really quick. It's in a nice area. I would love to live in the home if something ever happens and it's safe. It's going to appreciate. Then, yeah, I might buy a house that has marginal equity. I might buy a house that has negative equity, as long as the other peers are very, very solid, like the cash flow is real solid, um, and so on. Okay. So, equity is very important in my mathematical equation when I do a deal. But on the other hand, you know, if a house has no equity, I'm still maybe willing to do the deal, uh, as long as I have positive cash flow, massive positive cash flow, etc. House doesn't need any repairs, low holding days. The rental comps are great. Okay. Now there are secondary mathematic flags that I look at, and the secondary are appreciation. Now, I don't buy a house because I think that in the future it's going to appreciate. That's speculation. I don't do speculation. Only time I do speculation is, in Bitcoin and cryptocurrencies. But then when it comes to real estate, I don't like to speculate. That's why my very first rule was when I buy it, it needs to pay me money, right? When I buy it, it needs to give me cash flow. So I'm not going to buy a real estate if it doesn't give me 600 plus a month, 400 plus a month. Okay. I'm just not going to do it. The secondary flag, primary is the number one, but secondary is appreciation. So I'm not going to buy a home in the war zone, right? I'm not going to buy a home in an area that Detroit can change. I don't live there, so I don't have that inside information, but I'm not going to buy an area that's, you know, I'm going to be focused on areas that are high demand, that have great school systems. People want to come to there for their school systems. Uh, and I feel like the growth is happening this way. Okay, so those are the type of homes I'm going to be buying, and so that's my secondary mathematics. Is this home going to appreciate in 10 years? Is this home going to appreciate in 15 years? Is this home next to good jobs? Is this home close to next good jobs? Is this home in a good school districts? Okay, the other thing I look at is HOA because the mathematics of the HOA because when I buy the home I have to pay HOA fees and I look at see how strict they are because I really don't like HOA. Sometimes I bought homes that have HOA, but I prefer to buy a house that doesn't have HOA. Now again, this is my secondary. If a house gives me massive positive cash flow, it has tons of equity, it has no repairs, then the HOA mathematic factor is going to be very, very little. Okay. Um, so I'm gonna let this airplane pass. So just kind of summarize it up for you. There are two types of mathematics of a subject to deal. My primary and my secondary. And again, I focus on mostly on my primary, and the secondary is what I call the whipped cream, right? And the very first thing in the primary is does it give me cash flow? That's the very, very important thing. How much do I have to bring back to cure the loan? How much is it behind? That's very, very important. Okay. What are the rental comps? How long the days on the market, DOM, how long it's going to take me to rent this sucker out? What are the repair costs when I buy it? And that's very, very important. And because if someone says, well, it just needs carpet and paint, well, shit. in a $1,500, 15,000 square foot home, carpet and paint may cost me 6 to 10 grand, right? If I outsource this stuff out. And equity, how much equity the property has. But again, on a downward market, I'm more flexible on the equity because I know I'm buying it when it's bleeding, and I don't expect to get in there and have a lot of equity. Even though I love to buy it, but I'm realistic. I realize that, hey, I'm getting a free home, my credit's not being checked, the debt is not under my name because I have a non-recourse loan, and so there's a lot of pros to that. And I know that I am going into the fire, and I don't expect the property prices to go up, so of course they're going to come down. So I'm more flexible now on an upward market. Then equity is my major compression. Like if I'm not getting equity, then I'm not doing the deal, and that's why usually I sit out when the market is going up because there's just too much competition and you can't get really good, great deals. Um, but again, you can buy it and the price will go up because everyone's buying it. Okay. All right, guys. Thanks for watching. Click the like button. Don't forget, if you need help one-on-one profit sharing, I work with you for 1 whole year at mrnofluff.com. And if you need a side hustle, you need to make some money now without learning, without having a website, without going to any seminars, without paying any crap like that, then the new Flip, guys, revolutionary. Not only does it make you money today if you take action, right, but at the same time you get to learn about real estate. You get to learn about how to talk to sellers, how to find deals, how to inspect the property, all the stuff, skills you need to become a successful real estate investor without all the cash that's required to be a real estate investor, without all the debt. Okay, the new Flip at mrnofluff.com. Be your dreams, guys. Best country ever. Peace.